What?
No, I was just reading Stafford's notes. Chicago O'Hare boring. What could go wrong? 17 miles underground at 115 miles per hour.
Yeah, what could go wrong?
I'm not taking it.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
We're pumping out another episode of the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. Make sure you visit pathtradingpartners.com and get MotiveWave for your 14-day free trial. So let's join Bob and Mike with a casual conversation of news and the markets.
The whole point of this week was the AT&T Time Warner deal, Bob.
Yeah. AT&T Time Warner deal gets approved, and that starts a flurry of not only speculation, but aggressive moves in other deals, such as Comcast making that outsized bid.
$35 a share for 21st Century Fox in cash.
Right, which is
all cash deal.
Right, which Netflix has been laughing at in terms of their stock performance. It's just interesting that particular deal. I mean, a lot of the concerns were, would these things get approved? And with that Time Warner deal getting approved, that AT&T Time Warner deal, all of a sudden, everybody's like, okay, we need to do these things. Apparently, the Justice Department is going to play ball. So let's just do these things. So now it'll be interesting to see what. Who's the other suitor for 21st Century Fox? Is it Sony?
The company that ruined Star Wars.
Disney.
Speaking of all these deals, Netflix set an all-new time high.
All new time highs.
$398.86 this week so far. Have you seen what its PE is now?
No.
I'm sorry. 263. I don't even know what to say. Although, if you've been long Netflix, you should probably take some off the table.
Would you take some Amazon off the table? Amazon at all new time highs.
I stick more with Amazon than with Netflix.
Interesting.
I
don't disagree.
I mean, although I'd take some Amazon off the table and wait for another pullback.
Yeah.
Because right now we've just hit some very key levels. But Netflix is just absurd. What is the PE of Amazon, by the way? Let me see. At least Amazon has their cloud web services. All right, they're at 279.26. Slightly high for my taste. I mean, I'm not saying they can't keep growing, but slightly high.
Yeah.
I think it's some of these Fang Mag?
Fan Mag.
Fan Mag. I think it's time to take some off. Hey, look at that. Apple hit my next GAN area higher. My next projection for price for Apple was 194.11, hit 194.20, and now pulled back to 188.87. It's going to actually pull back to its rotation zone pretty soon. But yeah, the customer service. What announcement for take some Netflix and Amazon profits if you have them, because they're getting very overextended. Netflix has gone vertical.
Again, Fan Mag stolen from Pim Fox, who I don't know if he stole it from somebody else. Have to give credit. Facebook, Apple, Netflix, Microsoft, Amazon, Google, Fan Mag.
Yeah, Google all new time high. New all-time high. 197.28. What's Microsoft? Microsoft, yeah, 102.69. Yeah, a bunch of these are overextended.
They are the absolute biggest risk of the market. At least Microsoft's P is only about 27.5. Interestingly enough, the sort of social momentum, the long-term sentiment of Microsoft's only about 64% bullish. That's different than some of the other fan mags, which are a lot more.
Yeah. So that's the big things. Like if Netflix starts tanking, I think Netflix has got to come back to reality at some point. It's just it's the old adage, though. Wouldn't go shorting Netflix right now.
Yeah, I'm starting to use it less and less, which is giving me the kind of feel to delete it for a while and see how it feels. I'm watching it less and less. Delete.
What's your go-to streaming service now?
I watch a lot of Hulu, and I watch a lot of the individual because I watch reruns, right? Generally, when I'm watching TV, I'm not looking for something new. I'm looking for something just kind of noise in the background or put me to sleep. So I watch reruns, or I watch a lot of movies that I've already seen, so that if I fall asleep on the couch or fall asleep in bed, I don't care that I missed something. And the thing about Netflix is if you're fans of their original series, that's it. You're stuck. I never got caught up in any of those. The only original series I really got caught up in was a series called Patriot, which was an Amazon series. So I never really got into any of the others, although people tell me I should. I've got an HBO app, and then I've got a lot of local sports apps. I'm just watching it less and less and less.
You've been watching the World Cup.
Not yet, but that's on Hulu, but not yet. I haven't watched yet because Italy's not in it and the U.S. is not in it, and those are my two teams. I've got some friends in Colombia. I might root for Colombia. They got a decent chance. But no, I haven't yet. I do enjoy the World Cup. I look forward to it, but without Italy and the U.S. in it, it's taken quite a bit of the joy away from me for it.
Yeah, that's the bummer for me.
Mm-hmm. To what? Canada?
Oh yeah, well, Canada, the soccer powerhouse or football powerhouse.
Yeah, Canada.
By the way, crypto's recovering a bit off their lows. 6107 we traded down to in Bitcoin earlier this week, and now we're back up to 6,600 right now. So at least a nice little recovery. Ethereum triggered a double bottom yesterday. That went to the first two targets before pulling back. Did you see the SEC official? I don't remember which one this was. Says Ether sales are not securities transactions. So then the CBO says, well, based off the SEC's comments, that removes any obstacle to Ether futures. So we're going to go forward with Ether futures.
Who said that?
The CBOE. CBO.
CME already has them, so that's why I asked.
The CBO.
Yeah.
So you know, crypto's not going away. The more of these legitimate futures contracts we get, though, better it is. Really, but this week, the big news in stocks was that AT&T going through. But the biggest other news we had the North Korea summit. We had the Fed hikes. We have tariffs talk again. We have the ECB. So that's the real meat and potatoes of this show. So
yeah, tell me what you want to start with.
Well, you want to take it in chronological order? So first we had the North Korea.
Yeah, first we had the North Korea summit, and I think a historic agreement was signed. I think that's nothing but positive, and I think there were no real details, so the markets didn't react, nor should they. That's it.
No, the market sort of shrugged it off like, okay, next. That was just like, next. What was next? Was that, which one? The next was, I guess, was it ECB or Fed?
Fed.
All right, Fed. I know they hiked.
They hiked 25 basis points as expected. The dot plots moved out to include a fourth rate hike for 2018. So they're now projecting 4, of which 2 have been done. Overall, though, their long-term Fed funds rate prediction did not change. So that would only change It would move a rate hike forward. If you looked all the way out to 2020, it wouldn't add another rate hike in there. It would just move it forward. They moved their GDP forecast from 2.6 to 2.8%. Inflation forecast from 1.6 to 1.8. And these are long-term forecasts. But people need to understand that the Fed's forecasts are not forecasts like Mike saying Apple's going to this price. It's not like that. They just take the current data and they say if all else stays the same, this is where we'll be. And anybody who's watched the Atlanta Fed GDP Now number knows that. Anytime something comes out, they adjust based on that data. So it's not really a prediction, more so than an amalgamation of the current data. They also said that the economy is solid. They removed is likely to continue on this path. They just put in it is solid, and they removed that rates are likely to stay below where they should be based on inflation. That part I'm paraphrasing. And they said that we're going to remain accommodative, but they removed that rates should be below. So it was hawkish. Then you go to the press conference with Jay Powell, his second press conference ever, and he very much removed a lot of the hawkish expectations from the statement by just saying, look, we're going to communicate more. And one of the things he's doing, he's implementing to communicate more, is he's implementing a press conference after every single Fed meeting now, starting in January of 2019. And then right after that, he said, I don't want anyone to assume that that means there's going to be more rate hikes. It doesn't. So he was very good. Jay Powell's very good. Like, he's just very, if you watch his press conferences, you understand what he's saying. He doesn't dodge questions. He answers them very thoughtfully and completely. He does talk both sides, but essentially he says, look, I have to talk both sides because I don't know what the data is going to be. So we did have CPI this week, which came out a little hot, 2.8% year over year inflation, which was higher than what was expected. And all of this happened in the shadow of hotter inflation. So the markets had already kind of adjusted to that. Short end of the yield curve, all the way out to 5 years, rates rose. They rose on the 30-year as well, but the curve flattened from 43 basis points 2s to 10s to 36 basis points 2s to 10s. That's the Fed.
So when do you think we're going to invert?
We might. There's a guy that I read anytime he puts something out. His name is Kamal Shri Kumar, I believe. I follow him on Twitter and on LinkedIn. And he put out a piece right after the Fed meeting that we're likely to see a recession by the end of 2019. And he was basing that somewhat off of the yield curve inverting before that. He's a very smart guy with a really good track record. I don't necessarily agree with him, but I thought it was an interesting piece. He pointed out that while jobs are getting better, job situation is getting better, the labor force participation rate between 25 to 44-year-olds is declining. So it went from about 82.9% to 82.5% to 82.1%. I maintain because a lot of those people are starting their own businesses, not necessarily because they can't find work. But I also think they're starting their own businesses because of structural productivity and weakness. So that's kind of like, we agree on what the data is, obviously, but not necessarily what it's saying. So, but he's a smart guy, though, and he's got a really good track record, so you might want to listen to him more than me. I just don't agree there'll be a recession by 2019, not with all the fiscal stimulus coming through.
But did you see Dougley this morning? The rate peak in this cycle may be lower than in the past. I think that's probably true.
I still think they're going to end up dialing it back. I just don't think there's a recession by 2019. So anyway, that's the whole Fed thing.
And
people need to understand, though, like there was a lot of stuff on Twitter going back and forth that was politically motivated. The change of rates to 25 basis points to 2 to 2.25% does not marginally affect any growth in the economy, and it gives seniors a little bit more on their savings. So there's really nothing bad. If you have a $10,000 balance on your credit card, your balance will increase probably by about $18 to $20. It's not. You shouldn't have a $10,000 balance anyway, but a lot of people do. You're not going from a $10,000 balance to a $15,000 balance. All right, so it really doesn't affect anything that much, except it gives people on a fixed income a little bit more money. But again, it's about $20 more. It's not a marginal change, or not a dramatic change, rather.
Any dramatic changes with the ECB this week?
Yes. So the ECB. All right. So the ECB did not touch rates. They commented on QE exactly as the four prior speakers had said they should, which means knew they would in my book. They are going to cut QE in half starting in October. October, November, December is going to go from 30 billion euros of asset purchases down to 15 billion euros. And then January of next year, there will be none. So there's that. Then they made what I think is a historic and somewhat irresponsible statement in the beginning of the press conference, the opening remarks. Mario Draghi said that rates are likely to stay on hold till summer, at least summer 2019. Now, considering we're technically not even in summer 2018, that means more than a year, right? That is, I just think, irresponsible. The euro had its biggest down day from the open to the close since Brexit, since the Brexit vote, June of 2016, which I would argue was a much more dramatic event than this, although I did just call the statement historic. But anyway, it's somewhat historically irresponsible, in my opinion, to put that much pressure on keeping rates low, knowing that people are going to act on this particular type of a statement. Now, I think he tried to dial it back a little by saying we're still going to look at the data, and I think everybody knows that. But certainly that is an overly dovish view of a central bank that is ending quantitative easing. Plus, the rates are negative. The overnight rate from the ECB is negative 40 basis points. So if you compare it to the Fed, there's going to be 3 rate hikes, possibly 5, before the ECB even looks at moving their rates off of negative. So do you want to buy the euro? I don't. I mean, I don't know whoever would, given that set of facts. I mean, those are statements that have been made. I guess they're not facts until they happen. So that was a pretty big deal. The QE ending, I guess, is supportive for the euro, but nothing else is really supportive for the euro, and their data continues to come in mixed to soft. So it's the right thing to not touch rates. I just don't know it's the right thing to commit to it for that period of time. You know, the Bank of Japan also had a meeting, which was the least publicized of the 3, and they left everything the same as well. And Hirohiko Kuroda, who's the governor of the Bank of Japan, said that there is an entrenched mindset of deflation in the Japanese economy, and he needs to change that. I feel like that's what Draghi did with that statement, is he began this entrenched mindset of negative rates in the Eurozone. Just think it was irresponsible. But our job is not to care about that. We don't care about that. Our job is just to look at what the charts are going to do. And I think if you look at a euro chart, you're probably looking at selling rallies, a euro US dollar.
Well, we actually were just on this last rally, we rallied straight to the declining rotation zone on a weekly basis. And then, I mean, it spiked just above the 8 EMA. It actually hit also the 50-week, which is hooking over, and then tanked after the announcement. Right now, trading 116.08. Interesting. If we break below that 115.10, next key levels down 113.79, then 112.49. So I think longer term, we're definitely going to hit those levels.
Yeah.
I wouldn't be rushing in to buy euro. Although we do have if we do rally again the euro, or do you have a chart of the euro on a weekly basis?
I do. Give me a second, I'll pull it up. I have a chart of the euro futures. Is that good enough for you?
Yeah, I mean, it's
essentially the same in the euro. It's not inverted like the yen is.
No, so it's, yeah, but a lot of people, if we do rally again, they're going to see a really big head and shoulders.
Yeah, let me see. Yeah, I see it. Yeah, it's definitely there.
So
that's going to be a really big one if it forms.
Yep. So
that's got to be like a 106 target. If again, it's not fully formed and certainly hasn't triggered.
Right. And it's not one we trade off that pattern, but that would, I'd be expecting it down to trade down to probably the 105 to 106 area if it did.
Yeah.
If it did. So that's over the longer term. So that was a lot of, and anything else? What's going on with in tariff land?
So by we, I mean the American government. I'm not going to put it all in the executive branch. Commerce Department approved the first round of tariffs overnight, last night to this morning on China. China said they're going to retaliate. So President Trump began to prepare another list of products that would be retaliatory tariffs to the retaliatory tariffs to the tariffs. So retaliation upon retaliation upon retaliation. And I'm calling the U.S. tariffs on China retaliation for trade barriers and tariffs that have been on. That's the thing, like whether you believe in this tariff thing or not, so again, not our job to impart our opinion on whether what they're doing is right or wrong. There have been trade barriers against U.S. products for quite a long time. It is not unusual that emerging markets use the strength of developing markets to build their own markets from emerging into developing. Now, some would argue that that's been the situation, and everyone that plays in that particular realm understands what the deal is. You want to sell stuff to our people. We have to use your riches to help enrich our people or enrich ourselves, whatever. That's a matter of opinion, or that's probably not opinion. Anyway, that's the game. So this particular president says, we don't like that game. It should just be a level playing field. That's his opinion, and there's nothing predatory about that opinion. He's just saying, yeah, well, I don't agree with that. You can enrich yourselves on your own. So President Trump's tariffs are retaliatory to other trade barriers. So he's retaliating, and then China has threatened retaliation to that. And now he's threatened retaliation to China's retaliation of his retaliation to the original barriers. So it is counterproductive to global growth and equity market profits outside of the Russell. So if you were to believe this is going to continue, you want to look at stocks in the Russell. You want to look at smaller caps. I like smaller financials. I like bricks and mortar discount stores, things like that in a tariff world, because those things are going to earn their money in U.S. dollars. So a side note.
Well, that's very good insight.
Thank you, Michael.
I need some more insight into crude, because from a technical basis, crude is a fascinating pattern, a textbook pattern, broke the key trend line, went back, rallied back into the declining daily rotation zone, and kissed the trend line goodbye, and then massive drop today in oil. Down to 60.
This oil move today, to me, I don't see anything other than we need to dump oil before the OPEC meeting next week. We got the EIA figures, which was a draw on crude and a draw on gasoline. So that should be bullish, but it's not. Refineries, again, jumped up on their operable capacity, which is known as refinery utilization, which explains it. It jumped up last week, and it basically is unchanged, 95.7. I mentioned last week, I don't remember if it was on TV or here, that with that high of refinery utilization, you were going to see a draw in crude oil. The draw on gasoline, obviously demand. Summer driving season officially started Memorial Day, so the demand is increasing, and the EIA actually upped their demand forecast from 20.38 million barrels a day to 20.41 million barrels a day. So the pulling out of crude oil and all that is there. So all I can see, we don't have Baker Hughes rig counts yet because we're recording this before Baker Hughes rig counts, but all I can see is people are saying, let's just get out of oil because OPEC and Russia are going to agree to a production increase. Russia's already increased production. So has Saudi Arabia and Libya right now, because of attacks on their facilities. Actually, about a third of their production is offline right now. So all these things point to a bullish move, yet we're down like over 2% in Brent and over 1.5% in WTI. So that just means to me everybody is just getting out before this OPEC meeting.
My next key technical levels lower are 63.14 and 62.05.
Wow, 62.05.
Yes, not to be specific or anything.
Yeah.
But those are the next key technical levels lower. And we have, as I said, the declining rotation zone on the daily. So that is bearish. And on the weekly, we're now back below. It looks like this week's going to close below the bottom of the upward sloping rotation zone, and the 8's hooking over. So that's starting to get into potential bearish mode, or at least into potential consolidation mode. This is the biggest stock pump thing again. But Elon, he's going to build the high-speed tunnel from downtown Chicago to O'Hare over 18 miles for $1 billion or less.
You see that the underground Paris in tunnel cost $450 billion, and it was shorter. And the New York subway cost like $6 billion. Now, granted, there's a lot of union money in there. I'm not, but it's like he's going to do this for under $1 billion.
Well, you don't know what you'll hit. That's the big thing. Once you start boring, that's why it's so expensive.
Al Capone's second vault.
You remember back when was that? How long ago was that? Remember when those workers hit that tunnel thing and it flooded all the basement?
It drained the river.
The river into the basements downtown. I could just see Elon's thing chugging along and hit something, and then all the basements in Chicago are underwater. He's never going to do it for $1 billion or less. And then he releases the. Now, how does he do this? I want to know something, because before you can't buy your own stock if you know there's going to be a material disclosure that could benefit the company within 30 days, okay?
Yeah.
So he buys a ton of stock. He's been buying it for the last couple of days. He's been doing his pre-market pump again. We've been having a massive short squeeze. But then he announces now Boring Company is private. However, he also announces part of that they'd be using the Model X chassis as the
base of the boring machines.
No, for in the high-speed tunnels, they'd be using the Model X chassis and Model X component stuff to provide the transportation in the tunnels.
Tesla will make the train cars, he said, with Rob Emanuel at the press conference.
Now, how can you be buying your stock and then make an announcement from another company that you're part of, but it's tied into a company of stock you just bought because the announcement just benefits the company of stock you just bought? I want to know how that gets by the SEC. If they actually had a ball sack.
Here's an interesting thing.
That's not right. You can't do that as CEO. But
yeah, I don't know when the SEC hammer is going to come down on something that Elon does, but it's going to happen. It has to happen.
Well, because any other CEO, if they're making a material announcement, even if it's for a secondary company on a company that their CEO that they just bought a stock of, and it pumps that company up, that's a very illegal. And it's like I don't know what the SEC is doing, but it's like completely ignoring them. So. And by the way, his Tesla, which just laid off 9% of its workforce this week. Did you see that?
Yeah.
Including engineers and salespeople and everything. And there's a bunch of people pissed about that. But he just laid off 9%, and now his market cap is above Ford and GM again.
I don't know why that bumped the stock up. I mean, you could say that it's cost cutting, but cutting that particular sector of employee is more about. Those are the people that are going to help the company grow down the road, building and refining products. That's not where his problem is. His problem is in producing the amount of vehicles he says he's going to produce and the amount that have been ordered. So I just don't know why that just to me, again, was like just the fans, Tesla and Elon buying the stock because, great, layoffs.
Anything to make it look like it's making a profit. Maybe every quarter he'll fire 10% of the workforce just to squeak by.
Yeah.
Well, I think he had to really pump his stock up right now because he's going to go into earnings, when he reports it. I think it's going to be on the 1st of August. and he's going to report his worst quarter ever, but he's dumping everything into Q2 earnings, so it's going to be abysmal, and then here's my prediction, then Q3, I think he'll actually post a profit by selling all the remaining ZEV credits and doing everything he can that he dumped into Q2 to make it look horrible. So the stock has to be up. So it's going to tank after Q2 announcements. But if it tanks from like right now it's $360, the way it's going, it could probably get to $400 before earnings. Then it'll tank it back down to like 300. But if it had tanked it when it was in the 200s, it would be in the 100s. So I think he's doing everything he can to pump this thing up. And they're playing all sorts of games with short squeezes and everything else. But I think his time's going to run out with the SEC at some point.